Thanks so much for tuning in to this talking point conversation with the management of Asian Paints. There are some companies which can grow strong despite having higher bases, despite having the impact of price hikes being felt as well. And Asian Paints is certainly right up there when it comes to this category, if there are more players in this category, frankly. The question to Mr. Amit Syngle would be more about whether he believes the Omicron variant hampers this growth momentum, if you will, in the fourth quarter, and whether or if it's a demand deferment and not necessarily a demand destruction, if you will. And of course, the internals of how quarter three went by as well. Mr. Syngle, great having you, and thanks so much for joining in today. Hope all is safe.
Yeah, everything is good, and great to be on the channel. What we see is that for us, quarter three has gone beyond expectations in terms of how we have seen it, both from a point of view of demand and top line. I think the performance has been quite good, with a volume growth of 18% and a value of 26. On a CAGR comparison over 3 years, also that is a double-digit growth. So I think the volume story is very, very strong, and it is quite intact in terms of what we have seen, despite the environment being what it has been in the last 2 years in terms of what we have seen. Overall, we took quite a bit of price increases in the third quarter, almost to the tune of about 15%. We had already taken about a 7% increase earlier in the year. So even by that quantum, I think the good part was that we were still able to maintain demand very, very strongly. At the same time, our margins really improved, and sequentially, the PBDI margins have also kind of gone up very, very strongly. So overall, I would say it has been a very, very strong quarter in terms of what we have seen. One trend which we have been seeing is that obviously when there is an impact of COVID which comes in, the immediate consumer sentiment does go down to that extent, and it kind of takes a little bit of a toll at an immediate kind of a stance in terms of demand. But what we see is that the demand doesn't kind of go away, it only gets deferred. And that is something which is a phenomena which we have now been seeing for the last about 1 year and 10 months, so to say, to that extent. And we have seen various major and minor waves of COVID which have come in and gone to that extent. And therefore, what we feel is that the current impact is transitory. It will definitely kind of impact a little bit of a January in terms of what we see. But overall, I think we are fairly optimistic that going forward, February and March should be good, and it could kind of really compensate for the overall demand for the quarter. And therefore, we look fairly okay in terms of how we are looking at the quarter going ahead.
Because the price hikes come into effect, I presume a large portion of them, I presume in quarter four, would you normally have anticipated an even stronger operational performance, or would the rising costs of raw material as well as this Omicron demand impact kind of negate a lot of that good work, if you will?
So if you see on a 9-month level, the volume growth is upwards of 40%, and so is the value growth. So we would have possibly expected the volume and value to be even higher in Q3, because the months of October and November were extremely good in terms of what we saw. We got a little bit hit by the third wave in the second fortnight of December, specifically. To that extent, I think it did affect quarter three to that extent, not because of the price increase, so to say, but more in terms of the consumer sentiment going down immediately at that point of time to that extent. And normally would have expected even a higher kind of a top line delivery, which would have happened in Q3. But having said that, I think the overall quarter has done quite well.
Yeah. So therefore, my question, do you reckon that in Q4, would the margin uptick would have been better because price hikes come into effect? Or do you think that this Omicron variant and the rising cost of raw materials, crude is an unprecedented spree, if you will, would that kind of impact that kind of positivity?
So two things there. One, we will have a full impact of all our price increases of quarter three, which we saw in November and December, on a full quarter four to that extent. So that would be definitely far more positive with respect to the overall profits and margins in terms of what we will accrue in the quarter. The second thing is, as we see inflation, I think we've seen the higher side of the inflation is past us to that extent. What we are seeing is that the current environment is definitely inflationary. As you mentioned, crude has gone up, and there are certain other things which are like the crude derivatives are going up and so on and so forth. But I think there is an equivalent amount of some of the raw materials which are also kind of showing a downward trajectory in terms of what they have seen earlier to that extent. So overall, what we see is that while the environment might be inflationary, it would be fairly mild in terms of what we see over a Q4 over a Q3, which might not really impact the overall margin so much, so that then it will definitely not negate the effect of the larger increases we have taken in Q3 to that extent, in Q4 to that extent. So overall, we don't see a disruption from the point of view of margins or inflation going forward so much as we see Q4 going ahead.
Mr. Syngle, if I'm not wrong, premium and luxury products and projects all drove growth. Metros in tier 1 and tier 2 drove growth. The question is for Q4 and maybe the quarters ahead, if rural is not in as strong a shape, would it impact your overall volumes as much, or is it something that you can't forecast right now?
Actually, what we see for us is that, rural, as we say, T3, T4 kind of cities which are there across the country, they have also done fairly well, I would say. And it's only the relative sense that the metro T1, T2 would have grown higher to that extent. But it's not that T3, T4, the rural world has not really grown for us to that extent. So I think what we see going forward, given the fact that today we have a substantial presence in terms of smaller cities and towns to that extent, we see that the rural growth would continue to that extent. In fact, one of the things which we have seen is that whenever we have a higher COVID wave which comes, it's actually the rural which starts to grow higher than the metro T1, T2 cities to that extent, because the impact of COVID always has been higher in terms of the metro T1, T2 cities. So from that point of view, I would say that we are still looking at a buoyant kind of a growth coming from the rural cities to that extent. We still feel that there is an agrarian story which is still there, given the fact that the monsoons have been good and so on and so forth overall. So I would say in the relative sense, rural should be okay for us as we look at Q4.
Is it already showing that sense? Last fortnight, December, January currently has...
Very early to say, because right now it is, just about 15-20 days into the month to that extent. So very difficult to say, but possibly by the end of January, we'll get a sense of it.
Okay. One quick follow-up, and that is how the auto demand has not been there, so to say, I presume. And when I heard a couple of auto majors currently, they are preparing for a degrowth in the Q4, even for two-wheelers, forget just four-wheelers alone, semiconductors, what have you, all of those issues. So you were doing this without the auto demand being there. At some point of time in 2022, presumably, auto demand would come back too. Does it serve as a big kicker for volume growth then? And would Q4 see the impact of auto demand continue to remain lackluster, or would other segments make up for it?
So if we look at the overall industrial paints demand, I think we have done extremely well, other than auto, whether it is powder, whether it is general industrial or protective paints overall. So even if you see it in Q3, the overall growths which we have been able to get outside auto has been fairly good to that extent, in terms of high double-digit numbers in terms of what we have seen. As the auto demand comes back, and to some extent, definitely it will be compared to the relativeness of this year, what we will see, it will further egg on the overall industrial growth as we kind of go ahead to that extent. And therefore, I think that is going to be a very positive sign in terms of what we see to that extent. However, having said that, even the entire Asian Paints overall sale, the impact of the retail and the institutional segment is much higher than the auto segment to that extent. So therefore, the impact would not be very, very high from an overall growth point of view, but from an industrial growth point of view, it will definitely be something which we look forward to.
Got it. Mr. Syngle, final question. Safe to assume that based on whatever little I understand thus far, that you presume that volume growth would probably be at least circa what happened in Q3, if not more. Value growth could actually bump up because of the price hikes in Q4.
So see, what we see is that the way we are looking at focusing very strongly at the premium and the luxury end of the market in a very, very strong way going forward. At the same time, we look at a large amount of work which takes place in the upgradation emulsions, which is basically looking at the bottom of the pyramid very strongly in terms of how we are able to upgrade the consumer going forward. So what we see definitely is that the trend of volume growths should continue, because that is something which we have been pursuing in a very, very strong manner to that extent. And what we also see is that along with that, the value growth also should be high to that extent, given the fact that we have taken certain price hikes which have been there in the Q3 to that extent. So therefore, I think the price hikes would impact largely the value growth going forward to that extent, and a lot of other initiatives would impact in terms of how we are seeing the volume growths to go up in Q4.
I wish you all the best, and it'll be lovely to talk post Q4. Just so much happening in this quarter, including elections and what have you. So looking forward to that. But thanks so much for talking to us today, Mr. Syngle.
Thank you so much for inviting me on the channel. It's always been a pleasure.
Thank you so much. Viewers, thanks for tuning in.